Hi guys, Max here, and this is, of course, your daily market update for yesterday, the 5th of July. Now, as you can see from this heat map behind me, it was really rather volatile in both directions. Some parts of the markets did really damn well, like big tech, as you can see. Google, Amazon, and Meta all up by more than 3% for the day. Apple and Microsoft and Tesla up by 1 or 2%. And most other NASDAQ listed tech companies were sort of similar, rising by a few percent. They saw quite a strong performance. But the rest of the market wasn't quite so positive. Financials were okay, about average. Healthcare was a slight decline. Industrials, real estate, and utilities and materials, though, actually performed really quite poorly, with most companies falling by 3 or 4 or even 5% for the day. Now, with oil stocks, it was actually even worse. As you can see here, the energy sector really did get hammered, with some companies there falling by 7% for the day. The reason for that is really quite simple. Oil prices dropped by 8% yesterday alone. We'll talk more about that in a moment, though. Now, on the whole then, how did markets perform? Well, the S&P 500 rose very slightly by 0.2%. The Nasdaq did really well and rose by 1.7%, but then the Dow Jones did quite poorly and it fell by 0.4%. In the rest of the world then, what did we see? Well, we saw another very volatile day for other markets as well. The rest of the Americas were really quite poor. Europe in particular was really quite poor. China was mixed and the rest of Asia was poor as well. The FTSE 100 then, stocks here in the UK, fell by 2.86%. The Stoxx 600 fell by 2.11%, meaning that on the whole, the MSCI World Index rose by a mere 0.3%. Now, all of this was really based on recession fears that have continued to heighten, and this is where things really get weird. The reason NASDAQ listed tech companies rose when the rest of the markets fell on the news that actually a recession is coming is because people aren't really thinking that a recession is good news, but they are thinking it will change how the Federal Reserve and other central banks react. And what they're really hoping is that the Fed stops their quantitative tightening, they stop their interest rate hikes, and instead they go back in time to the world of 0% interest rates and loose monetary policy, which would be really beneficial for these NASDAQ listed tech companies, which need cheap capital to survive and to continue to grow and thrive into the future. Now, as the fears of recession set in, as usual, we saw the dollar rise in value against its peers. So the dollar spot index rose by about 1% for the day. It's just still seen as a safe haven, again, despite what many people would like the dollar to be. The euro fell by 1.5% in comparison to the dollar, and we'll talk about that in a moment because that's really quite significant. The pound fell by 1.3%, and it's now sitting at about $1.20 each. Now, the euro, as I speak right now, is actually at about $1.02. It has dipped below $1.02, and this is the worst it's been in 2 decades. And it's obviously very, very close to seeing parity with the US dollar. Now, why is it doing so poorly? Why is the euro really underperforming for these last few months? Well, in essence, there's a euro crisis occurring right now as we speak. Inflation is very high across the continent, and so the European Central Bank needs to hike rates to try and bring that inflation back down to appropriate levels. But at the same time as that's happening, there are governments like those in Italy, for instance, and so they need bond yields and interest rates to remain low so that this debt stays cheap, so that the country remains solvent. As a result of this, the European Central Bank cannot service these two aims because they are in direct contrast to each other. And so any country with the euro is basically seeing its requirements not really being fulfilled. It's just not physically possible for the ECB to service every country at the same time. And a single currency amongst multiple different countries is always going to have these kind of problems. Now, speaking of bond yields and things like that and fixed income assets, how have they performed over recent days? Well, in short, yields have fallen. The US 10-year Treasury yield fell by 5 basis points and is now back down to 2.83%, a really low level compared to where we've been over the last month or so. The German 10-year yield fell by 15 basis points, as did the British. Now, again, this is for the same reason that most stocks fell while NASDAQ listed tech stocks rose. This is all based on the idea that a recession is coming. And so what the markets, the bond markets in particular, are pricing in is, yes, a few more rate hikes in the short term, but in the long term, they're expecting rates to be cut, for interest rates to be slashed right back down to 0%, and they're pricing that in right now. Now, of course, I said I was going to talk a little bit about oil today, and we are going to, because it's just fallen by a pretty huge amount. It's been fairly volatile, and as I speak right now, WTI crude oil is down by 8.1% from the day before, back below $100 a barrel at $99.70 right now as I speak. Brent crude is sitting at $104, and this is obviously a major shift from where it's been sitting recently. It's all based again on recession fears, this time with the assumption being that actually a global recession of the likes that we saw in 2008, where almost every country in the world is suffering, well, that's going to lead to lower oil demand in the future, and so prices would be lower then, and this is being reflected by the price today, thanks to speculation and investors and things like that. Now, to be perfectly honest, I do think this is premature. Don't get me wrong, I think we're in a recession, but as of right now, demand for oil is still very high. And so this kind of volatility, I don't expect it to maintain. I don't expect prices to maintain at these really low levels. It seems a bit ridiculous to call $100 a barrel a low level, but over recent months it has been. I also think this is quite an irrational move because actually the data suggesting that we're in a recession or that a recession is coming is identical today to how it was just 3 days ago when prices were 10% higher. There has been no new news actually meaning that a recession is more likely. There is no new data suggesting that this recession is more likely. It's just like all of a sudden investors turned around, sentiment shifted, and they started predicting a recession. Now, gold has also been struggling with its price falling by 1.9% over the last day again, currently sitting at $1,766 an ounce, which is a really low level compared to where it's been over the last 6 months even, but it's quite nice for someone who would like to be accumulating gold at this point. Now, on the topic of oil, there has been some good news in this sector coming out of Norway, which is a fairly large oil and gas producing state. Basically, there had been a lot of fears that workers in this country were going to go on strike to stop doing their jobs and to stop production of oil and gas, which would obviously present quite a large problem for really Europe as a whole. There's already a stranglehold on oil and gas coming out of Russia, and this was an absolutely awful thing that it was looking like it was going to happen. The Norwegian government, though, stepped in, they got in the way, and they basically put all of these talks of a strike to rest. And as of right now, they are not going to strike into the future. They're putting this towards something called a compulsory wage board, which will manage this dispute and work out a solution. I don't really know the details. You don't really need to know the details either. What we do know, the important thing for us, is that this strike is no longer happening. And as a result, this potential for further limits to the supply of oil and gas across Europe is not actually going to happen. And that is good news. Now back to the charts for a moment because we have a fair bit to talk about crypto. Now, as you can see, the crypto markets itself is fine. It hasn't particularly soared over the last day, but it's up a small amount. Bitcoin just above $20,000 and Ethereum just above $1,100. Most altcoins were actually up or down for the day by small amounts, 1%, 0.5%, 0.1% in either direction. No major moves here. There is some actual news regarding the crypto markets though, and for once it isn't all bad and it isn't all good. There's some good news coming out of Celsius. It's a little bit hard to call it a good news, but maybe a silver lining. Basically, they've paid off some of their debts, and in particular, the debts towards their Bitcoin loan, which has reduced the level at which they would be liquidated by their loan carrier. At this point right now, if Bitcoin falls below $4,000, then this loan would get liquidated, and that would be another huge problem for Celsius. Frankly, I do think that's quite unlikely. I'd love to see Bitcoin below $4,000. I would buy a hell of a lot, but I don't think that's going to happen. So Celsius has managed to protect itself from a small amount of further turmoil. Some bad news we have then in the crypto space comes out of Flex USD, another failed stablecoin project which has lost its peg and is no longer worth the $1 that it's supposed to be worth. Now, this one was weirdly similar to the Luna Terra stablecoin. It had a program related to this stablecoin which offered an 18% yield. Luna had Anchor, which offered a 20% yield, so there's the similarity. Of course, this one has now collapsed as well, and this isn't good news, but it was a rather small stablecoin, so it isn't actually awful for the market either. Now, there's another small crypto company called Vold, which I personally hadn't heard of before this news, but they've come out and announced that they are halting withdrawals because they're having the same problems that every other crypto company is having. They don't have the assets to pay out to their customers, so they're trying to stop a run on the bank by just refusing to pay anything out. Now, again, this isn't good news, but it isn't awful news because it's such a small company, and so the number of people and the amount of assets that are going to be lost from this, well, it's rather small. Finally then, this bit is actually quite bad news, and it comes from Voyager, which is a pretty major cryptocurrency company. They have an exchange, they have their own token. I believe the YouTuber Jeremy from Financial Education used to absolutely love this company. This was about a year ago, I'm remembering this from, but I saw a few videos of his where he talked about the Voyager token, I believe, and how he invested a whole lot of money in it and how he expected it to take him to the moon. Frankly, I don't think he'll be too happy with this, but maybe he got out of this program a long time ago. This is a pretty major crypto company and it's filed for bankruptcy, which is awful news. The markets, though, don't really seem to be reacting. What does seem to be the case is that almost every cryptocurrency company that custodied people's assets in the past seem to have taken those assets and then gambled them on the crypto market going up forever. So now that the crypto market isn't still going up, they're all finding themselves in a whole lot of trouble and they're all starting to die. Now, as crypto investors and crypto as a whole is getting hammered, Ray Dalio and his hedge fund Bridgewater Associates is doing really pretty damn well. As you can tell from this article here, over the first half of this year of 2022 so far, his fund has made 32%. Now that is an absolute huge number. That's a great success. He's been notably bearish on equities thanks to the macro environment, the monetary environment and things like that. And this is a macro fund, so he's made a boatload of money so far. Now this is called the Pure Alpha 2 Macro Fund. It rose by 4.8% last month alone. It did, however, lose 12% over the course of 2020, and it only made 8% in 2021. So it had been slightly struggling for a while and it had been losing investors, but this performance here is probably enough to send it back into the limelight to give Ray Dalio his 15 minutes of fame once more. Now, it being a macro fund, it's trading based on actions from central banks, based on interest rate hikes and things like that, inflation rates, consumer sentiment, big picture stuff regarding economies as a whole. And so far, it's gotten most of its bets right, in particular, the ones regarding the economies of the world slipping into a recession. Now, finally, I have a little bit of news coming out of the United Kingdom, some domestic politics that you actually may have heard of, and it's the idea that Boris Johnson might finally be leaving office as our Prime Minister. Now, I put a video out on my politics channel earlier today, which goes into a bit more detail regarding the story, and I'm actually going to put out a second one later because new stuff has happened and there's a new development here to talk about. In short, though, there was another scandal surrounding the Prime Minister. This time there was a sexual assault where an MP got a bit drunk at a party and then pinched two other guys' bums, and the guys complained. And there was an investigation, and Boris Johnson knew about this and hired him for a new job anyway. This has been enough to really piss off a hell of a lot of people, and it's turned into once again another scandal for Boris Johnson. Now, the actually important thing here is that Rishi Sunak and Sajid Javid, two very senior ministers who actually are very reputable, they've both quit their jobs in the government, which is a major hit. Now, throughout all the previous scandals regarding Boris, throughout all the party gates and everything like that, I've always been of the mind that, frankly, if he just ignores it, eventually the media pressure will subside and he can just go back to getting on with his job. But this is the first one where I've actually thought, okay, maybe Boris Johnson is going to be forced out of office from this, mainly because of Rishi Sunak, who has sort of been the golden boy of the Conservative Party over recent years, and him resigning from his position is an absolutely massive hit to Boris Johnson, and I don't think that can be overstated. Now, why are we talking about this on a finance channel? Well, because the British government could be about to change. When Sunak and Javid gave in their resignations, they both specifically noted that they want a low-taxing, low-spending government, a traditional Conservative government. Over the last couple of years, the Conservative Party have been the complete opposite of that, raising taxes and raising spending, basically becoming some kind of weird Blairite new Labour Party that frankly doesn't really please anyone. Now, if this happens, if Bojo loses his job and he's replaced by this new Conservative Party led by people like Sunak and Javid, that would be a major change for the British economy, for our markets as well, and the effects of that would likely be seen across the rest of the world. We put in a disastrous windfall tax on oil companies just about a month ago, which was an awful idea and something that is not going to positively impact our economy. That kind of thing is going to reduce investment in oil and gas exploration into the future, and it's going to contribute to more supply side crises into the future as well. A new British government that doesn't have such a short-sighted view like that, well, that's going to be good news for oil supply in the world, and so these kind of effects actually will have impacts on foreign markets as well. If you enjoyed this video, then make sure to like, comment, and subscribe to bless the YouTube algorithm. It really does help. If you want to join our exclusive community, then check out our Patreon. You get access to our Discord server and extra content like access to my portfolio and buy and sell alerts for all my own investments. Also, make sure to check out the link in the description to Masterworks. It can help you protect your portfolio against market turmoil through fractional shares of art from world-famous artists. Art has historically proven to be uncorrelated to the markets, so it's a really valuable resource with the markets falling every week. There's also a link in the description to I Trust Capital, which helps you to invest in crypto through your tax-advantaged IRA, which could literally save you thousands. If you, like me, think crypto going down is a buy-in opportunity, then now is the perfect time to join I Trust Capital. Thank you all for watching. Stay stoic. Until next time.